This evening, we're going to look at the impact of news on the Bund and how we trade around it. I don't want to spend this evening talking about current fundamentals for the Bund because this kind of information gets quickly outdated, and if you find that you're coming back to the webinar after 6 months or a year, as some people are likely to do, a lot of the points I would be covering if I'm talking about current fundamentals would be irrelevant. So I would rather keep it more generalized. Suffice to say, though, that government bond yields have fallen dramatically as investors are still continuing to struggle with a world of low growth and subdued inflation and falling productivity and this high level of debt globally. But looking at the fundamentals in general, whilst it's true to say that they impact the long-term trends, in the short term, as we all know, the news is often very fickle. It makes markets very erratic as traders seek to understand it. And this fact was probably illustrated best with the Greek debacle that I'm sure you can all remember. It was at times verging on the farcical, with the market rallying or falling on almost every comment from a government official, often completely out of the blue, making it very, very difficult to trade. You've kind of got a similar thing, I think, in cable at the moment. We're waiting for the vote on June the 23rd, but as we get a little bit more information about who's coming out ahead in the polls, cable is liable to make these sharp spikes. But it can also be hard to get to grips with exactly how the market will move on certain news. Sometimes you think the market will have to react in a certain way to a certain piece of news, but then the market goes the other way because that news is priced in. I found this out very early in my career. I used to focus more on fundamentals than technicals because it was what I discovered when I first got into the market. And I'd look through the papers and I'd read about what was happening, and I'd see a story on a certain stock rallying as they expected strong earnings, and I'd watch the stock and it would creep up, but I wouldn't buy because I wanted to make sure the earnings were actually good. And when the earnings did come out and they were inevitably good, as was predicted, I would buy, and then the stock would straight away go down. And I was always baffled by that. I thought, well, if the news is good, why is the market going down? And I learnt on the job, as it were, that the market often prices things in, and so therefore when they do actually happen, the market often reverses. It's the old adage of kind of buy the rumour, sell the fact. So you do have to be aware that the market is pricing in news, and if everybody is aware of it, and as everybody has had that news for some time, it is likely to be priced in. So if it becomes fact, you may find that the market doesn't go a whole lot further. Other times the market will blindside traders because there's an instantaneous reaction to a figure and then a digestive reaction. We'll talk about that a bit more in a minute, and I'll show you a trade that I did over the news in the Bund. But what I mean by a digestive reaction is when the traders in question have a chance to think and interpret what has happened. And that word interpret is key to the equation of news and how it affects markets and why trading it can cause so many problems. Because traders hear news, obviously, and they have to interpret what that news means and how it's going to affect the market. But the problem is most news stories can be interpreted or argued from at least two different angles. And what's more, if you're trying to understand what's going on, it's quite hard because the commentators spin the news to fit the price action. So they can look at the market and simply create a story around it. I'm sure you guys know that it wasn't so long ago that every time energy moved, it would have a knock-on effect on the markets. And we'll turn our attention to energy for a minute because a lot of these markets are interrelated. But we'd see the equity indices moving off the back of what happens in oil. And we'd have the case that when oil was falling, it worried traders that oil was falling so hard because demand was so low and it didn't bode well for the economy in general, so stocks would sell off. And obviously energy stocks that were constituents in the major indices would get sold off on the back of it, and they'd also drag the market lower. But then you'd find that the market would have an up day even though oil was falling. And you'd think, well, hold on a minute. Normally when oil goes down, the market should go down. Why is the market going up today? And you look at the news and you just find the same pundits flipping the argument on its head and saying, well, the energy stocks were oversold now. And actually, cheaper oil, when you think about it, is positive for growth in the long run. So that's positive for stocks at these levels. And, again, the point I'm making in a very roundabout way is that you can argue everything from two sides, and I think that makes it difficult to trade the news. One of the things I did realise very early on, along with the truth that often lay behind the buy the rumours, sell the facts saying, was that when there's a trend combined with fundamentals that everyone knows of, and thus the sentiment's at its strongest, the market often can have a major reversal. You see, what happens is as fundamentals hit the market, the analysts that are paid by banks and hedge funds study these, and they make recommendations to the fund who begin to buy. This often attracts follow-through buying. People get technical signals as it perhaps moves up, breaks overhead resistance, forms flags, breaks out, and retail then begin to buy based on the technicals, and everybody ends up long in the trend. And I always give an example of this whenever I teach anything related to news, and it's a very old one, but it was a pivotal one in my experience. So, if you've come across this example before, which you may well have done, if you've had any experience with me, then just bear with me. And the reason I keep mentioning this, even though it was back from 2008, is because, as I say, I was involved in this trade, and it was very, very pivotal for me. You can see that there was an absolutely huge move in wheat. This is a weekly chart of wheat, and it was fundamentals that drove this up. I mean, make no mistake about it, there was a huge shortage of wheat, and this is what drove the market up. Nonetheless, you do get technical entries in. I mean, you only have to know basic knowledge of technicals to know that this, for example, is about as technically bullish as you can get. Market breaks out of resistance, market forms a bull flag, market retests the low end of the bull flag combined with prior highs, and it forms a weekly hammer. And as far as technicals go, there is no better entry to the market than that. I mean, that is absolutely a thing of beauty. There's no other way to describe it from a technical perspective. And I would say that regardless of the fact that we know the market goes absolutely parabolic straight after. But only really, I think, a knowledge of fundamentals is going to enable you to capture the majority of that move, because if you don't know what's driving the market, you're likely to make technical decisions like maybe offset at prior highs. But anyway, I'm digressing because it's not really about technicals tonight. But the fact of the matter is that this market went absolutely vertical, and there was a point, I remember it very well, when they actually removed the limit up for a single day, because these markets can go limit up, and when it goes limit up you can't buy anymore, so the market is literally shut until the next trading session. And they came out and they removed the limit up, which essentially means anyone that wants to buy is being given a chance to buy. And you've really got to think about that for a second and understand that in this parabolic trend, that is an open invitation to get long. And at the same time as we were seeing that, I remember a headline, and ever since I started teaching, I've looked for this headline, and I can't remember what paper it was in, but I will never forget the headline, which was "The world has run out of wheat." And a part of me thinks it was the FT, because it was a major broadsheet. I'm positive it was a major broadsheet, because I saw it when I was working at Futex. I remember even when I saw it as well, I was walking to the train station in the morning, but I saw that headline. And again, it doesn't really matter where it appeared, but I remember it was such a bold headline. And as you'll see here, if you go onto Wikipedia and have a look at what was happening in wheat fundamentally at the time, wheat stockpiles hit a 60-year low. I mean, there just wasn't wheat around. And yet that headline and this fact, that is here on the chart. So it's not just that we get a pullback emerging from there, but the entire trend of the market changes. And that was very powerful to me to witness that at the time. So what I began to understand at this point is that when sentiment is placed one way, then the market often does turn. And again, this is often best seen in the media. Probably a better example, which is more recent, was this one. This is quite a small little graphic, but this was the front cover of Newsweek, and it announces the end of the euro. This was published on May the 17th, 2010. Now, if you have a look at May 2010, the week in question was basically there on the chart, right where that arrow was. That was the week. So it did carry on down for another week. It went lower, but then you can see that that was a cyclical bottom, and we didn't break that bottom again for well over 2 years later. So we were very, very close to a bottom when that news was released. Now, again, it's a well-known fact that publications often call market turns with the front covers of their magazines. Others have noticed it before. It's nothing new. But what happens is the average person that's not even a trader is getting hold of this news, and that's when the market tends to turn, when we get a kind of crossover from the trading sphere into the public domain. And I'm always on the lookout for things like this. Look how strong the sentiment is behind this headline. It is literally a foregone conclusion. There's not, is this the end of the euro? Euro in dire straits? No, it's the end of the euro, full stop. It doesn't question it at all. And, don't get me wrong, I don't fade front page headlines, but it makes me always keener to try and fade the trend if a setup presents itself and I'm going against a headline like this. And at the same time, more so than just taking the trade is the fact that I understand if I do get an entry, it might be something that I could actually try and hold. But sentiment aside for a minute, let's look at the actual scheduled news, because again, you're not going to get many trades off the back of sentiment. You might see it from time to time after a big trend that you get a magazine cover, but again, you can look to take action on that at the time. It's not something that you're going to see on a daily basis. So when it comes to news that breaks each day, I'm checking the calendar each day, and the reason for that is I want to know when there's going to be event risk. At the moment, I'm using Talking Forex, which you can see on the screen. I like the calendar with this particularly rather than say a calendar from like Forex Factory, because it does have auctions and central bank speakers. So it gives you a little bit more information about what's happening on a given day. A lot of people ask me, do I sit here, staring at the headlines? No, in fact, I don't read a lot of the headlines. Obviously, when key news hits the market, it's scheduled, I'm reading it. And if there is a big move happening, I'm usually going to scan the headlines and listen to what the squawk is saying regarding that move. But what I do tend to do is I tend to read the morning call, see what's happening overnight, see what traders are thinking about as they get to their desks. And I'm trying to work out whether it's a risk on or a risk off environment. So, risk on is very basic. It means that market participants are willing to put risk on, and this means moving money into equities and out of bonds. Risk off means taking risk off the table, and generally money flows out of equities and into the bonds. But again, the idea behind doing this is I can see what is moving the market at the moment and how it's responding to good news. For example, if there was good news overnight, how is that market performing? So that just gives me a little bit of a heads up on what is going on. When it comes to the actual scheduled news itself, I pull orders. So any orders that I might have in the Bund for levels, I pull them about 10 minutes before the scheduled news if the market is trading close to them. Now, note that only applies to levels that are close to the price before the news. People do ask me, as you would expect, well, what do you mean by close? Can you define close? And I can't define it. It's not a number of, I would say, if it's within 50% of its ATR, then I'm usually going to pull it. So if you have a look at, say, the ATR in Bunds at the moment, you can see that the ATR is just under 60 ticks. Okay, so if we're within about 30 ticks, roughly speaking, of a level, and there's a big bit of news coming out, I'm usually going to pull. So when I say, a big bit of news, I'm talking, non-farm payrolls, FOMC statement, even ZEW is pretty big, something like that. But the reason for pulling the orders is that there's not a lot of liquidity in the market and there's not a lot of two-sided trade. This little video that I've got here, it's a bit of an old example actually, but it was filmed over an ECB rate decision, and actually rates came out in line. But what you'll see as I play it is you'll see how the liquidity really drops off on the ladder here. You can see here at each price we've got coming up for a couple of hundred. Now you'll see it's 12:42, so it's just under 3 minutes before the announcement. We will just push it forward to just before the news. Here we go. And you'll see now it is 20 seconds before the scheduled release of the news, and it's got pretty thin. Look at this, 21, 23 on the bid here, 41.50 on the offer. I think it even gets thinner as we get to about 5 seconds before the news. It really thins out, and actually you get a 3-tick underlying spread here. Alright, see it there as we're now 6 seconds before the news. You've got 9 on the nearest offer, 1, 8 on the bid. Right, so we're literally 1 second before the news, and you see how they pull back. So there's 74 on the nearest bid, 76 on the offer. I think it even widens to 3 ticks in a second. There you go. And then it just drops here. Now it's just actually in line, so it didn't go very far, but you'll see that it has a very quick move there. Obviously, because this was in line, there'll be traders wanting to fade it. You'll see this 1300 that appears on the bid here. I can't remember whether this was a spoof or not. I'm pretty sure it wasn't. It stayed there throughout the whole move. I don't think it got down to 55s though, but obviously they knew it was in line. They were thinking, you know what, if we can spike down into there, happy to take some long. So it's quite interesting that that appeared straight away on the ladder into the spike. I'm often looking for things like that on the news. Generally, you find the liquidity tends to come back into the market relatively quickly. I mean, in this particular case that I've just showed you, the liquidity comes back in after about 10-15 seconds. But sometimes you find that just after the news, you'll see a large player appear on the bid or the offer. I haven't got an example of this to show you tonight, but sometimes a large player will appear and either sit on the bid or sit on the offer, and they'll try and get filled. And I always take a cue from that. You know, if someone's trying to perhaps get into a market or looks like they're trying to get out of a market, sometimes I will get involved. But that is a pure dom trade, and it's relatively rare. You know, so you might see an example of it when you come into the live room. You know, have a look at the market by all means over news, but it's not a big part of my strategy. So in short, what I'm going to generally do is pull orders before the news, put them back in right after the news. What I mean by right after is usually 2 or 3 minutes. One of the things I should say is that if I'm in a position going into news, I usually get out just before the news. Now, it's very difficult for me to give you kind of concrete examples, because you might be in the live room and you might see, let's say for example, that I'm long the Bund and I'm 20 ticks on side. Maybe I've got a daily bias, I'm expecting a big move, and the non-farm payrolls is coming up, and I might stay in the move. Now, I might stay in that move because I'm significantly on side, and I know that, you know, I'm probably going to be able to get out without doing too much damage. You know, the market's got to drop 20 ticks for me to get carted at break even, and then, you know, I might have had, say, a 10 tick stop before that when I initially took the trade, so the potential for too much damage is relatively small. But if I maybe got in with a 6 tick stop and I'm 2 ticks on side or 2 ticks off side when payrolls is just about to come out, I'm usually going to flatten up. That's something I took from prop, because obviously the tighter the stop you've got, the more adverse slippage it's going to have on you. Likely you'll already know that by now, but you know, again, if you've got a 6 tick stop and you maybe get slipped even 24 ticks, you've lost 4R, and that can happen on big news. But again, if you had a 20 tick stop and you got slipped 24 ticks, you're going to be down fractionally over 1R. So again, whether I will hold through the news will depend largely on what kind of stop I've got, whether I'm onside, and so I can't really give you a hard and fast rule. But I would say more often than not, I'm likely going to try and flatten up. That is only, I should say, for the 5-minute strategy, because bear in mind I do trade the bunds on my swing strategy, and I don't know whether you guys have done the swing course or know about the swing course, but because my stops are usually wider, I'm less likely to pull over news. Now, I don't actually trade the news itself. The only time I would trade is if there is a massive shock and it is likely to result in a huge movement. An example of this would be a terrorist attack. Now, I wasn't in front of my desk for the most recent one where the bomb went off in the airport, but if there was another, I would just lift the offer and get long bunds. Like, if you're in front of your ladder and there is a terrorist attack, just buy bunds. I don't want to get caught up in the morals of this right now. Maybe some people are thinking, yep, they do it. Maybe others are thinking this sounds a bit sick to be making money when people are dying. I'm not going to question the morals of it. We're traders. We're doing our job. If the terrorist attack goes off and you're not a part of it, and you know your family are likely not a part of it, I'm just going to buy the market up. And if you feel bad about it, donate it to the Red Cross. But just on the subject of terror, a large trader told me never overstay your welcome on a terror attack. And the generally accepted rule is get out of the position when they release the body count. Now, I feel actually sick saying this, but I'm trying to educate you, so I've got to say it. But as morbid and sick as it sounds, traders hate uncertainty. So if you start seeing bombs go off and it's absolute carnage and nobody knows what the fuck is going on, the bunds are going to go absolutely into melt up. But the fact of the matter is, if they then come out an hour later and they say, okay, no more bombs have gone off, the dust is settling and there's 20 people dead, that's still terrible. That is absolutely a terrible tragedy. But the market will think, oh, only 20 dead. Okay, we can cope with this. And you'll see that oftentimes it will just stop moving up, and it will actually, a lot of the time, reverse. If you look at terror attacks, they often have an outright reversal once we know how bad it is. Again, it's that uncertainty. The traders hate uncertainty. They can cope with bad news, but they can't cope with uncertainty. Now, I rarely trade news, but a couple of months ago now, I got into prop. As I told you guys, I was backed to trade in props. I'm trading my own personal account, and I'm trading an account for a large firm. And it was my first day live, and everybody was getting pumped about the ECB, and I decided that day I was going to give it a crack. And this was on the 10th of March, and this is the chart. Look at this shitstorm here. So this was the day that the ECB cut the deposit rate by 10 basis points to a historic low of negative 0.4, I think it was, and they stepped up the pace of QE. So they went from 60 billion to 80 billion euros a month. And they also packed in unlimited 4-year loans to banks at pretty much near zero cost. So basically the market went absolutely apeshit. I bought at 62.64. I got filled just above this swing high as we pumped up here, and I sold out here into this little level on the 5-minute chart at 83. If you go back on my Twitter, I actually tweeted the fills and the time that I was in the trade, which was a matter of seconds. So it was a very, very quick trade. One play in and out at the next level. And I traded that in some pretty decent size. It was quite hair-raising to do decent size on a news trade. And I made 19 ticks out of it. And it was a very, very good day. But I tell you what, it completely reinforced why I don't trade the news. And you might think, well, what are you talking about? You made 19 ticks, in about 1 minute, very easily at decent size. Why on earth would that put you off the news? Because look at what happened. If I hadn't got out of that, it would have been carnage. And it whipsaws tremendously. You have that spike up that I get filled on, then it spikes to a new low, then it goes absolutely vertical, and then this calamitous move happens. But you see, what happened here is that there was an event, and then there's the interpretation, as I said earlier, and the interpretation can often be influenced by other things that happen along with the news. So what happened here is Draghi implemented those measures, which was very bullish for the bunds, but he said that he didn't anticipate it will be necessary to reduce rates further. And so whilst the action he took was very bullish for bunds, the comment was instantly taken to mean that negative 0.4 was going to be the absolute floor that will be permitted by Germany. And so the general impression was that it was like a fucking kitchen sink job. You know, the ECB had fired everything at the problem, flooding the system with fresh liquidity for as long as it takes to keep the economic recovery alive. And yet the feeling was that this was it and there's nothing more they can do. And hence you get the whipsaw as, you know, his comments come out, and then his comments in light of the action that he'd taken was being digested. And it's very, very difficult to trade. I'll tell you a much easier trade to take is the rumour trade. The rumour trade is where it's all at, as far as I'm concerned. This can really present some great opportunities, something to look out for. So one of the recurring themes you're going to see in the marketplace is if there's a rumour and the market moves off the back of that rumour, and then that rumour is negated, the market will go back to where it started when the rumour hit the market. I'm going to show you some examples of this if you're confused. But here is the Bunds. Okay. Now a lot of the time you're going to see the market move before you understand what is going on. But here the market is minding its own business, trading quietly along, and suddenly it goes apeshit here. Now this doesn't look like a massive move. In actual fact, it was about 30 ticks in 5 minutes, which for the volatility at the time was quite a decent move. But you see this Bund suddenly pump up, and that's the point at which you're going to turn your scorecard and be like, what's hit the market? And news broke that Russia had announced its missile early warning system had detected the launch of 2 fucking missiles from the central part of the Mediterranean that had been fired towards the eastern coastline. Okay, so there were basically 2 missiles in the air, and the Bund has just gone apeshit off the back of that, as you would expect it to be. We thought it was fucking nuclear war. But anyway, what it turned out to be is up here, right at the top, it suddenly announced that it was a test missile firing from Israel, and it was old news, and both missiles had crashed into the sea. And as soon as that happened, the market collapses straight back to where it came from. No, literally straight back to the low, before gently trending higher for the rest of the day. Now, the weird thing is about this is, I remember someone that traded this based on the swing failure, because it broke up and its swing failed this high. They knew nothing about the rumour that caused it to go up there, nothing about the rumour being negated, and caught the whole trade. Eerily enough, this theme is very, very common, and you know, you will find if you look at it long enough that you actually most of the time can get into the market and profit from it without even knowing what is affecting, because the market has a way of reacting to levels, and it's almost like the price action precedes the news. I'll show you more examples of this, but this is something that I have found out as long as I have been trading for. So whether you're in for the technical setup here or the rumour makes little difference, but the only key difference is that knowing there is a rumour gives you a target, because you know, even though I know someone that did take this trade, if it was me that was looking at this and I didn't know there was a rumour, then I'm not sure I would take that trade, because I would be thinking, well, we've got a level in and around here, you know, support over here on the far left, resistance, 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 support, and we've got this swing failure here, but I'm going to be getting in on the close of that with a stop beyond it, and we could run into trouble here. So there's not a great risk reward. It's not even worth me taking that trade. Now, if you know it's going down here because of the rumor, then it makes a big difference. This was another one. This was absolutely hilarious. This is a 1 minute chart of the Bund on the right, 1 minute chart of the S&P 500 on the left. This was 24th of April 2013. AP Newswire were hacked. So they'd said explosion in the White House, Obama is injured. Look at that impact on the S&P. I mean, when it kicks off, it fucking kicks off big time. I mean, that is a 1 minute chart, and it absolutely shat itself. And that's 15 handles in 2 minutes. That's what happens when people think there's been an explosion. There's literally zero liquidity. Bunds, funnily enough, only respond with a rather meager 17 tick rally. But there was time to get involved. You know, if you were at your desk and you see explosion at the White House come across your Twitter feed, there is time to get in, plenty of time, when you consider this is a 1 minute chart, you know, and it did continue pumping. But when the rumour was negated, and there was time to trade this because I remember it, they came out and they said very clearly, this is not true, AP Newswire is hacked, and you know you've got a short then, because you know this move is only based on a rumour. So if the rumour's not true, it pretty much has to go back to where it kicked off. from. And you see this does happen time and time again. Don't get me wrong, it's obviously very scary to come in and buy the S&P down here. I mean, you need balls of steel. In the Bund it looks a little bit easier because it doesn't have such a momentous move. But again, generally, all things considered, that's what you'd look to do. This was quite a good example here. I'll just quickly show you one more. This was oil, and you see you've got massive support here, and the market just prolapses straight through the support. And the rumor that was driving that down was oil is to be released from the strategic reserves. So they're basically going to flood the market with oil. And obviously a lot of supply means that price is likely to head lower. So we crater through support. I bought the low, almost the exact low, and I'll show you why in a minute. I had an order in, and so I just literally turned my back, and I come back and find that I've bought the low and I'm on side. Then I'm looking, thinking, what created that massive move? Then I realised it's a rumour. Once I realised it was a rumour that had been negated because the government comes out and says it's not true, then I changed my target from here, which is the prior lows, to here, which is where the move started from. And it makes a very big difference. I mean, you can see on the chart, that's an extra 100 ticks, a dollar move. So it really helps you with targets when you know what is behind the move. Now, why did I buy that in oil? Have a look at the broader context of this chart. Anything look familiar? Gap close and an absolute mountain of resistance. And this here, number one, the last high pre-breakout, and you'll see it hits it virtually perfectly. Again, no knowledge of the rumor or even the fact that it had been negated, and you make money. It's a bizarre concept, but I have experienced it enough times to know that there is definitely something there, although there'll be a lot of professional traders out there that will just say that can't be true. It's crazy. But anyway, to conclude, that is how I'm approaching news. So although I have traded it and I've made money with it, I would not sit there and trade figures. I think it's way too difficult personally. Again, with the reduced liquidity at any size, you can get some nasty fills, and with the whipsaw as well, I wouldn't be overtly confident to do it. The only time I perhaps ever would is if there was a terror attack. So I'm not going to trade the news. I am going to trade rumors though. Again, the way we trade that is if there is a sharp move, we have a look on the wire to see what's causing it. If it's a rumor, we take close note and we get ready. If the rumor's negated, we're going to put a bid or offer in at the nearest level if you don't fancy hitting market. If you do fancy hitting market, it's usually a very good trade. Other than that, we're putting all news around orders and always keeping an eye out for that overarching kind of sentiment, as it were. Now there's a few things that I'm going to give you guys to read through to accompany this lesson, because they're quite lengthy and I don't really want to get into these, but the things I'm going to share is I've got a white paper here which I found some time ago. I was given in prop. This is just about the fundamentals that drive Eurex and interest rate futures markets. Perhaps more of interest here is some information on the auctions. It's quite hard to come by decent information on auctions, and if you've seen the market moving on the back of auctions before and wondered what it's all about, what these auctions are, why they affect the markets, I will send over that, and also the month-end extensions. A lot of traders trade month-end extensions. It's something that I do look for in the Bund. A lot of guys in prop will come in on the last trading day of the month and they'll try and buy it up in the late afternoon, looking for a run up into the close right on the last trading day. And it's actually pretty profitable to do that. I mean, I can tell you, because I keep statistics, as you guys know, on fucking everything, that on the last trading day of every month, okay, so let's go back to the last one, that would be this Tuesday, the 31st of May. If you find the 4 p.m. candle, which is here, now this is quite a wide ranging candle, but that's the 4 p.m. candle. If you were to go long on the close of the 4 p.m. candle with a stop below the extreme, okay, of that candle, and you were to just hold it until either your stop was hit or until the day closed, you're going to find over the last 3 years you're going to have a 67% win rate. So 25 out of 37 occurrences has the market moved higher into the close after the 4 p.m. candle. So you can do this in your own time, but if you go back to the month before that, here's the 29th. So Friday the 29th of April, and you'll see that this is the 4 p.m. candle here. That's the close, and we trade up into the close from there. If we actually take it back to the Thursday, the 31st of the 3rd, here is the 4 p.m. candle, and you'll see that again it trades up into the close. That is the point at which a lot of traders try to get long. So after that 4 p.m. close, people are trying to get long. In actual fact, I remember a lot of guys in prop were trying to build long positions usually after about 2:45, but I found that it tends to go nicely bid from after 4 in my studies. So it's something to think about. But I mean, again, the month-end extensions is a relatively complex topic, and the sheet I give you to read on it will do it better justice than I can, because I'll probably confuse you even more if I start talking about it. So that's my take on news. Have you guys got any questions? Okay, good. That's an interesting point, Pete. Are there any ways that you can get ahead of the news? Um, the funny thing is that I think a lot of the time certain bits of news are leaked. You see some really suspicious stuff. I mean, the amount of times that I've seen bunds just move quite clearly before a figure is to be announced, and then carry on the same way when the figure is announced, makes me think that you can often take a trade based on the price action. The problem is that you can never be wholly sure. It could just be people covering positions ahead of news. It starts to trend up, you buy it, and then you get absolutely slaughtered. Sometimes you do see really suspicious stuff, but by the time you've seen it and checked that there's a phenomenon there, it often dries up. So I remember a time when it really looked like someone had something early when it came to the FOMC, and you'd see it 1 month in the bund, just really obvious that someone had something like size was being executed before the release. And then you remember that the next month, and the next month you see the same thing, and you think, fuck me, somebody's really got something here. By month 3, it doesn't occur again. There's a lot of short-term patterns like that, that, as I say, are so fleeting that you see them 2 or 3 times and it's gone. So yeah, there you have it.